up on Wall Street, the book review. How to use what you already know to make money in the market.
I'm Dara. I would like to share you about the Peter Lynch book. You know what? The book is telling about how to invest the money into the stock. And Peter Lynch described the book by storytelling. He's a smart guy, And he started the book with introduction from Kenny become fund manager at Fidelity Magellan. The book is telling about how to invest the stock in the long perspective and pick up the right stock. Okay, now guys, you know who is Peter Lynch? Peter Lynch is a very smart guy and he's a legend of Wall Street. He drove Fidelity Magellan funds and returns incredible in around 1970 up to 1980. From 1977, he took over the fund to 1990. When he retired, the fund grew from 18 million in assets to 14 million. Wow, that's cool, right? And he also succeeded in choosing selected company for investment. You can manage around 1,400 stocks. Wow, it's never done, to be honest. Cool, okay? Now, we have one of our team who would like to share to you about investment stock. So here I have Mr. Cahyanto. Hi Cahyanto.
Hi, Buddha.
Okay. Cahyanto, we understand that your interest invest your money into the stock, right? And also we understand you already read Peter Lynch's book.
Yeah.
Is there any tips from Peter Lynch you can adopt in the practicing invest your money into the stock? Can you share?
Peter Lynch's book is very good for the beginner
Okay.
who never play or buy a stock in the stock market.
Mm-hmm.
The first tip of Peter Lynch is about the blue chips. Blue chip stocks, maybe in Indonesia is like Telkom, Indosat, Astra International. What Peter Lynch's opinion about the blue chips? Usually blue chips already overpriced because everybody buy that stock, including the fund manager of mutual fund. So the price of blue chips already high. Usually.
Is there other tips, Jayanta, from Peter Lynch's books?
Yes, there are several tips from Peter Lynch.
Okay.
The second of Peter Lynch's tips is about number of stock.
Oh,
So you do not limit number of stocks. Find a good company. Usually fund managers limit their stocks. Let's say until 1,000. But Lynch have different opinion. He invests in and manage in 1,400 stocks. The other tips is about don't use your money which you will be used in the next 3 years because he sees that you should invest in the long term to get the maximized profit. Another thing that we learned from Lynch, he says about the fund manager. The fund manager may be in the mutual fund. They usually have restriction. They are too much monitored by the big investor, so they usually only get the short-term profit. When you want to invest, you should challenge your fund manager. Is it a long run or a short run?
So depend on us then.
Yeah.
Investor. I see.
And the other thing is do not pick up the stock on the list. You should find a company. What Lynch says, usually maybe in Indonesia there is, as we know, we have like LQ45 or Compass 100.
Yeah.
Peter Lynch says do not focus on that list. You should find a company that have a good fundamental.
Is there any measurement or prediction when we buy, when we hold, when we sell?
Yeah, what Lynch says, or
Yeah.
what we learn from Lynch in the book, he says that nobody can predict the recession, but maybe we can see the indicator, but the timing itself, it is difficult to measure.
I see.
Usually people already know after what has happened. So
Okay.
when you want to invest something, if you know there is a recession, so you don't want to buy a stock,
Yeah,
right?
yeah. Another interesting part from Peter Lynch's book is 6 categories of the companies. One of our team member will share what is 6 categories of companies. Okay, now, Mr. Hatanto, please.
There are 6 types of company that identified by Lynch. The first one is slow growers. Second one is stalwart. Then the third one is fast grower. And the fourth is cyclicals. And the fifth is asset play. And the last one is turnaround. So I will focus on the 3 of them that it is very important for the investor to buy the stocks. The one is I will highlight for the stalwart. Stalwart is basically it is usually the big company which still maintain the growth, such as the P&G and also the Coca-Cola. They are still investing in the long term and it is still profitable. And the second one I will highlight for the fast grower. Fast grower usually it is a smaller company that have unique and also the innovative product that it will have a potential growth for the future. And the last one that I will highlight is about the asset play. This one. The asset play it is usually the company that they have a lot of assets such as the land bank, also the mall, which in the future their asset price will be double or even a triple than before.
One Up on Wall Street is, in my opinion, the first or second book any new investor should read. In it, famed mutual fund manager Peter Lynch teaches how to use what you already know to make money in the market. One Up on Wall Street is really a good book. You need to read it to understand investing. A lot of what he says is similar to what Warren Buffett says in terms of value. Peter Lynch has also a good approach to common sense. It's a great read if you have any interest in investing and want some inspiration.
In my opinion, Peter Lynch's book is really good. It's just like a storytelling, so anyone who read this can understand easily. But at some points I agree with Lynch, but in certain point I didn't agree because Indonesia condition and situation is different with America, such as a political and maybe presidential election will affect to the stock market, and some points also not applicable because in Indonesia certain stock is not liquid, not like in America. And the last what I think is the book is too many repetition, and the example is not applicable in Indonesia because this book is about the stock market condition in America.
Another point opinion about Peter Lynch's book. Here we notice number 1. This is a great book for the smart investor. Now we can learn to start invest with the very easy fundamental, easy reading and easy understanding. Number 2, we notice that It is a brilliant book, but only read the book cannot become brilliant. There's no situation we learn about the company itself.
And